How you guys doing today? Welcome back. Today is December 9th, 2021. It has been a fat minute, not because of anything bad. I was just really sick. If you try to do stock market while you're sick, it's not fun. Try talking about it when you're sick. And the reason I stopped making the videos for a few days was actually pretty funny. One of my followers was like, "Man, are you drunk? Like, what's wrong?" And it's like, no, I'm not drunk. I'm just super sick on Dayquil. And my cat, who's being active today again, was getting all frisky and like overstimulated. So he was trying to like bite my hand and like scratch, and like he gets all fickle. So he was doing that while I was trying to talk about stocks, not feeling well. So the last video was a bit rough, but we're back in action, boys. How we doing? If you are new here, welcome. We're going to be talking about mainly technical analysis. On the screen right now, I'm going to show a picture of what my charting is going to look like. This is pivotal if you've never seen my videos before. When it comes to the tools on the screen, volume profile will be discussed in this video. I don't have the time now to discuss that. I have a 45-minute lesson on it for free right up here, bada boom, bada bing. Speaking of the class, I got two more of those I got to do the pointy things. Just one more, it looks like. When it comes to the class that I have, it's 25 for free online. Go check those out as well. I don't like gatekeeping education. They're all in there for you as well for free. Go check it out up there as well. That'd be great. Secondly, beyond the class and that, is that we have a journal in the description box down below. I keep track of all my plays. I don't know anyone else does, but I do keep track of my plays so you can keep me honest, right? If you are part of the Patreon Discord member, whatever thing, you know that I actually give my stop losses, my price targets, all those kinds of things that I'm looking for myself, and the journal is based off of those and every pick that we make. What's great is that way you who don't buy into that quite yet can at least check the journal, make sure the picks that I have are actually valid and working. Lastly, I mentioned it before, is the Discord and the Patreon. If you want to come check us out, great. If not, no big deal. We do have some really cool stuff coming out in the next few weeks and next few months. We've started the process on a trademark and a copyright for a new name. We're getting some branding done. We're gonna have a whole website. We have a newsletter coming up for people. We got a whole bunch of great stuff. If it's the best time to join now, I'd say it's probably getting there. I think it's gonna be a great time to check us out. It will be free until 1/1. I think there's nothing really much to lose besides time of not getting all the content you need from me earlier, honestly. So come check us out. That'd be great. If not, it's no big deal. Today we got 8 stocks. They're all large caps, small caps, micro, mids, all these kinds of great things in different sectors. Let's get into it. Let's talk about the picks for today. Otherwise, I love this community. I love y'all. Appreciate y'all. Let's get right into it. So first is Hershey HSY. Delicious Hershey Kisses. For my sweet baby angels. This is a great looking play to me. I'm not a breakout trader. What am I saying? I don't usually play breakouts. I don't really enjoy when it comes to the risk versus reward of a breakout near resistance. Now, you can definitely manage risk. I do find value purchasing much easier for what I like to do. But Hershey does have quite a great breakout looking here. Let's check it out. So you could short this if you do not believe in Hershey. I don't know why you would ever short a company like this. I mean, you go back to the 10-year with the dividend. It just goes up. Now, again, there may be years of sideways, right? So, I mean, you're not wrong if you do want to short it. But over the long period of time, this bad boy just gets higher. So I wouldn't really want to do that off the rip. But it is weakening, all right? It is getting overbought for sure. But if it's going to break out, it's going to retest maybe this 181 area and then take off. We can see these are all-time highs. I called it earlier. It's up 0.5%. Whoop-de-doo, no big deal. So can you short this? Sure, if you have fundamentals that say so. But overall, technically speaking, this kind of ascending triangle formation that's forming here is leading to some form of breakout. Again, we had one over here too. This was very much the same exact setup over here, and then it broke out. I want to say the same thing here. Hershey's has a great chance for that, especially with the consumer discretionary doing very well with the holidays. This could be a great play. Let's check the indicators together. What's so cool about this channel is I actually don't scan with or chart with indicators. Indicators show you 4 things, and on this channel we call it the MTVV, like the channel plus a V. Momentum, trend, volume, volatility. Those are just going to help us enter and exit a stock and help us show value, oversold and overbought. Right? It's going to help us show momentum, trend, volume, volatility. These indicators should be the icing of your cake, the technical analysis of the cake. If you are new to trading, you're probably going to rely on indicators too much, too heavily, and will slowly wean you off that as you get better with TA. An indicator should be a second thought. to the technical analysis and a second thought to the macro markets. With that being said, if you are new, see what I see, do what I do, and you might learn something new. Let's check it out together. So off the bat, the 10 EMA is blue, 50 is purple, 200 is red. That's RSI. Stochastic is what we use to find divergences. Have a whole class on that. And then Vortex is to find oversold, overbought as well. We can see clearly the 10 run-ups are really good. That's what we're looking at. I want to see this. See how we hold above the 10 this whole entire move? You just hold above it. And of course, you have one small break, right? But overall, it wicks down. It never really holds beneath it. Over here, very much the same, right? So over most of these big moves are over the 10 EMA line. We're still holding that. Right? If we lose that, you want to buy in towards the 50. The 50 is a very strong resistance and a very strong support. So if tomorrow you wake up and it's broken down beneath it, well, now we're going to wait to buy it at the 50 or the 200. But overall, until we lose that 10 EMA line, there's no real reason to be upset, to be worried of a shortcoming or us losing steam. So long as we have that, we're good to go. The RSI, as we can see, is certainly overbought. That makes sense for a breakout. You have to have steam to see that. And that's why I do enjoy value purchasing more than breakout investing. And again, that's high, bulls are high. So overall, Hershey's is overbought relative to this time frame, which I don't love more times than not. But you put it in the context of, you know, the recovery since COVID, folks are spending their money. Hershey's always does well with holiday season time. They look pretty good here. I would give it a shot if you do believe in the company. If not, it dips 2 or 3%, that trend line's a perfect entry. HSY, I definitely watch this in the future. Next is JEF, Jefferies Financial Group. A fantastic move up. I don't see a pure trend line. Again, I could take this and bring it over. There's no channel up. What I'm seeing more than anything is a lot of different broadening wedges. And what's that mean? When we see a lot of broadening wedges like this, these are going to be a megaphone shape. Why is this critical to spot and not try and fit like, oh, it's a wedge up. Whoa, it's a channel up. It's a broadening wedge. What's that mean? A broadening wedge means a new pattern's coming soon. I'm going to say it slower. A broadening wedge means a new pattern's coming soon. That's critical because what that means is that either A or B is going to happen. A, we're going to hug the supporting trend line and hold on to that and then make a new pattern off of that. Or two, or I guess B, idiot, will be that we're going to hold against the resistance trend line, hold against that, never see that supporting one again, and make a new pattern off of that. In short, the thesis is these lead to new patterns. So be prepared for that, honestly. And again, you can see here a nice broadening wedge kind of forming. Let's go from about here. That's gap, right? You can see a nice broadening wedge. And so there's two things that are going to happen. You're going to go blah, 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 and muddle down here near this trend line. Or you're going to go blah, 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 and huddle towards this one, not hitting one of these two ever again for our next pattern. As we can see, we're holding this one. So I don't think we're going to be going $48, $49, $50 up here. So a new pattern should be forming soon. If you didn't know that, there you go. Old resistance becoming a support line. It's melting up. The reversals are what? Melt up. Melt up. Melt up. It takes its time here. Do I want under 38? I most certainly do. Anywhere down here is perfect. Very good risk versus reward. I love what I see. Yeah, I do want it a bit lower, but maybe we can buy into momentum. Let's check it out real quick. When I say buy into momentum, I'm talking about trend lines. Trend lines. So can we cross a trend line and buy a bit higher but have confidence? In my opinion here, I'd say yes. My first clue is the 10 EMA line. Once again, we cross the 10 on this time frame, and it's absolutely sexual. I mean, this thing gets crossed, it's great to go. 50 is also fine. Okay, 50 is a great cross too. But the 10 is only 1% away. If we cross the 10 tomorrow and we hold over it, well, now we can buy into that, use that 10 EMA line as a stop loss, and you're good to go to ride off that momentum. 200 works, 50 works, but for me, the 10's just fine. If you want to buy into value, give me like $1 lower, we're good to go. RSI, it's fair. It makes sense. It's melting up. That's fine. Stochastic, it's low, -40, good value. No divergence. That's fine. And then bulls or bears are tied. Again, if you go to where this melts up started, like this gap here, it's moved about 0.48% in 13 days. These consolidating is fine. Most consolidations like this are going to lead to breakouts. I didn't say up. I didn't say down. Most of our big moves will come after a consolidation period. We're seeing that towards support. That mitigates and lowers our risk. I love what I see. JEF, I definitely watch listed. Next is OCDX. Ortho Clinic Diag Holdings. Love it. Then let's go to the 10-year. Oh, wait, it's a IPO. It just happened. That's part of the joke. Sick joke, idiot. So this is a really good looking trend line up. Absolutely gorgeous. Now, again, this could be like Zip, which we called recently, that broke down a bit but hit our price target. That's how we do here. But OCDX does have the new IPO curse that maybe it's too new of information to go off of. But this POC, if you watch the volume profile video, you're going to know this is the strongest support on the whole entire chart, and it's right here, above this support and this trend line. This whole area right here, mouse, is called convergence. That whole spot is a bunch of folks buying in for different reasons. Folks buying off the trend line will buy there. Folks buying because of volume profile will be buying there. Folks who buy the support will be buying there. We're going to buy into this area, if we like it, for that exact reasons. They're all converging together at $18.60. Love it. Great convergence spot. Sure, we do have lower highs here. We do have higher highs. But the consistent here is higher lows across the board. I love to see that. Let's check the indicators together. Let's start with trend once again when it comes to our EMA lines. A 10 cross, once again, is great. A 50 cross is better. 200 is the best. That's how it usually goes. Short term is the weakest. Medium term is the middle. Largest is the best, right? So, you could wait for a 200 cross, but I wouldn't give up, what, 8%? Yeah, 6% of profit here. A 10 cross would be just fine. But for a purchase like this, I want to buy into value when we're low. So I like to see that. Again, the value I want to buy into is exemplified by our indicators. RSI, it's low at 34. Stochastics at -40. I like that. And then bulls are lower than bears. So you can buy for a crossover. I think OCDX, though, is a perfect play for a nice value purchase. I would definitely watch this dip. Newer IPO. I love what I see. So do your due diligence. I don't know what they do. Go ahead and check that out, though. Next is PAGP. PAGP. What's great here is this beautiful trend line up. Once again, I don't see a clear resistance trend. That's been a consistent theme with today's episode, though. I don't see many resistance trends. So I think we're having an issue with volatility in the market and a lot of, choppiness. That's part of it. We can see there's no real trends going on here for the resistance here. What's great, though, is that we do have a nice supporting trend, a great old support here, and of course, we're pushing volume higher. Clear goals. That's what I really like about this play, too. You have good supports, good resistances. My cat's going to get all angry. He's overstimulated again. All right, good boy. Just relax. So we have 2.78 lower would be perfect for a value entry. And again, we're risking 2.78 to make about 8 here. It's about a 4-to-1 play. Overall, I do love what I see. I gotta be so, my cat's he's just getting lit right now. Let's go over there. So when it comes to the indicators, my cat keeps touching the keyboard, is we see the 10 cross is great. We can cross the 10, we're good to go. 50 is even better, 200 is even
greater. But 10 cross is fine. You could wait for that if you want to. But for me personally, I want to buy into value. RSI is at 42. That's pretty low. Stochastic, there's no real divergences. And then the bulls are low. Bears are looking pretty low as well. So whoever gets volume here is going to probably win. PAGP is a great pick. I hope I didn't get too distracted. My cat's just so lit right now. He's like, give me love. But overall, the PAGP looks really good here. I definitely watch this, dude. Next is PDCO, Patterson Companies, Inc. What's great is a support play. With a play like this, we're going to be giving up convergence. There's no trend line. There's no real pattern besides a horizontal channel, which are easy to play. But we don't have any real support besides the support play. We're giving up extra layers of support for simplicity. And again, some folks like that, beginners like that. I too enjoy that as well. PDCO, here's just a simple support play. Not going to beat you over the head with it. Obvious earnings overreaction. I'm not trying to catch a knife that's fallen what? This is a good, 15%? Yeah, 15% in a few days. But again, if we do start to make a support, we can look into it. Look at the reversals. Long time. Look at this. Long time. Long time. No point rushing in here. Give PDCO some time. Now, if we get some green tomorrow, like a little bit, yeah, you could buy in 28.9, risk 1% at most to make a full move of volume almost 18. You'll take that. But until then, I'd be a little bit cautious. A 10 cross looks very valid here, though. Looks pretty good. The 10 crosses are really good. In this area in particular, though, they're not. You should always notice these things if you can. In this area where we are, they're not going to happen very often. And when they did, it's pretty choppy, right? What's stopping us? The clear deterrent is that 50. So I think a 10 cross is fine. I wouldn't play off it. But the 50 would be great. But again, what is it, 10% away? Yeah, no one's waiting for that. So again, I think email lines here are fairly useless. If you can cross the 10 and get confidence, that's probably fine if anything. RSI is low, stochastic low, bulls are low, bears have never been higher. That's a great sign of, sell-offs being over-exhausted. So I don't think PDCO, unless the earnings were absolutely terrible, which I don't think they're going to be, it can't get much worse than this for bears. They're going to get exhausted and bulls will start to step in hopefully sooner than later. PDCO, I would definitely watch this. Next is STLD, Steel Dynamics Inc. I love steel plays a lot. Cliff is a go-to. And as you can see, they're very similar shapes, aren't they? Very similar, right? Now, X is another great one. Also at a great value with Cliff. Extra bonuses for you today. So all those are fantastic steel plays. This one also is a fantastic steel play. This is a great overall higher lows across the board. Starting to get exhausted from the uptrend, that's fine. Because this is a rock solid support at 57.66. If you love to play off of supports more than trend lines, well then you're going to be a little good boy and wait for it to drop down 5% more. If you can get it to 57.75, absolute steal for a play like this for risk versus reward. Up here, it's also fine. I mean, this is definitely not a terrible value. Again, you're risking closer to 3% to make probably closer to 12, so 4-1 for a full move. It's not bad, but again, if it does show some weakness tomorrow, if we can get in towards 57.66, I look for that. When it comes to our indicators, let's start with trend lines once again. Consistency, people, consistency. 50 cross is extremely valid here. Same with the 10. You can see the 200, though, is really being a deterrent here and being a resistance. If we can cross the 10 and the 50, both are fine for your risk tolerance. I wouldn't use either. I'd use a 10 possibly, but overall, I do want to buy in a value just a bit lower myself. 50, RSI, it's fair. The stochastic is at 16. Yeah, it's fair. And then bulls are high, bears are low. In this case, when that happens, you need to hope that bullish volume continues. If not, we have a good amount to drop down. It'll probably be seeing 57.75 if it does decide to dip. So STLD is fantastic. I love steel plays. I'd also, again, be looking at X and Cliff, for example. All fantastic. Overall, though, STLD, I would definitely watch list into this week for sure. Next is THO. This does have very PDCO vibes. They're very similar when it comes to just being a support play. Not going to take over amounts of time here to explain this to you. Same exact thing as before. Clear support, earnings, overreaction. If we can get life here, great. If we don't get life here, if we drop down to 100, I'd wait. Look, if we do come down to 95, 93, where this volume profile line is, that's an absolute steal down here. I wouldn't mind waiting for that as well. But I mean, right here, very easy risk versus reward. When it comes to trends in our indicators, a 10 cross is fine, right? 10 crosses are really good. All right, I think 50s are better. I think 50s are always better. But down here, 10s make sense. I wouldn't mind waiting for that. 50s okay. But overall, I think we're buying into value here. RSI is at 37, good value. Stochastic has never really been lower. That's a great sign of value. And bulls and bears are going sideways. It makes sense. We're consolidating. THO overall, very easy support play. Again, we're giving up these larger factors of like convergence for simplicity. And for some folks, that's what they want. Other folks, not so much, but I like to give a variety. It's what I do. THO, I definitely watch this. Thank you, Kitty. Last is Walmart. I don't like Walmart as a company. They're gross. I was actually going to say Kellogg today looks great, but also, I don't swear on this channel often, but fuck Kellogg. So we're not going to call them either. Walmart's okay for a support play. I, again, don't really love the fact that we only have a support play. It's already showing life. And again, what's the reward here? 7, 8%, and you're risking about 1. So again, you're risking 1.5% to make 7. 5-1 odds, 4-1 odds. I'm not good at math. Math's for, smart people. It looks okay, though. I think it's a very easy support play. If you can get in towards 136, this play is much more lucrative, especially you want to get in low. If it does take off, well, then you got a dividend long-term hold. Have a good time with that. But overall, Walmart should do just fine in this business, and in this cycle we're going to see should be fine with all the selling they're going to be doing. Again, with indicators, 10 crosses are fine. I'm seeing a 10 cross already. My cat's if I hit all the buttons again. You good boy. 10 cross just happened. You like 10 crosses. There you go. Ride the momentum. Once you lose the 10 email line, what do? You can sell out. But again, it's not perfect. This is very choppy. The 50 is a much better indicator of life. But again, a 10 is just fine. It's fair. I think Walmart's just a very, very easy swing here for 7 or 8%. It may take you 2 or 3 months. Are you going to be writing home if you're an options trader by making 3 or 4% in 2 months? I sure hope not if you sell options. But again, this is a fine, slow-moving play for a beginner. Walmart, I do love what I see. There you guys have it. Hope you guys have a good rest of your guys' week. It's sad I didn't get much video content out this week, but again, I think it's worth it given the dedication other forms of media and servers we're going to be doing soon. Again, trademarks, website, newsletters, all these great things are coming out soon. It's just as a nice process. And again, if you didn't know, making a business is a lot more about patience than it is about being active sometimes. And it's like warfare, as folks tell me. Long periods of boredom capitalized and climaxed by just madness for a few minutes. That's how business goes. So we'll see you guys on Sunday for another watch list. I appreciate y'all being here. Thank you so much. We'll see you guys next time. Thanks.